are here to discuss what the road to recovery is going to look like as we move into 2014. What are the major roadblocks that the real estate sector has to navigate through, and what could be the possible areas where we could see green shoots emerge? While we were introducing ourselves to each other a few minutes before the panel, Pankaj pointed out that most of the developers gathered here would disagree that we are going through a slowdown. But you know, various estimates, various studies that we go through, we do see absorption levels at record lows, inventory overhang at record highs. Are we in denial, or what is the reality? Pankaj.
Yeah, I'll start off with an anecdote 2 days ago. I was passing in the corridor in my office, so one of my junior sales guys or marketing guys, he caught me. He said, एक तो आप टीवी में जाके बोलते बहुत हो, आपने जाके बोल दिया है कि प्राइसेस 20% डाउन है। मैंने 3 साल पहले किसी को बेचा था 3000 स्क्वायर फुट में, आज पोजेशन लेने आया, कह रहे तुम्हारा एमडी तो बोल रहा है 20% डाउन है, पहले प्राइस कम करो। So he says, and this is in a project where the current prices are 5,000 rupees a square foot. So he says there is no slowdown, but you go on TV and everybody says that there is a slowdown, so it becomes a self-reinforcing kind of self-fulfilling prophecy. And many of the older customers, they're also feeling that, you know, we've bought something and there is some dissonance that, you know, we bought at the wrong time. So there could be an element of self-fulfilling prophecy there. And when everybody says it is down, then obviously absorption also comes down. There was another, yesterday there was a report in one of the newspapers where they said that 80% of the sale in the company is of apartments which is less than 5,000 rupees a square foot. A lot of the developers here are from the north and tier 2 towns. Many of us are selling at prices which are 2,500 rupees a square foot or 2,800 rupees a square foot. And we are talking about a cost of construction which is nearing, for multi-story building, it is nearing 2,000 rupees a square foot. Now the point is that the prices cannot come down any further. The only thing which can happen is that the developers, new housing starts will not happen and the developers will not start new projects. The problem is why is, the question to be addressed is why is new absorption not happening in many of the tier 2 towns or even in the periphery of the tier 1 towns? It is because of the negative sentiment. It is not as if the prices are very high. Unfortunately, a lot of the policies and a lot of headlines are made by the prices which are quoted in the city centers or tier 1 towns. I do not think that prices in India are too high. Another study says that the prices are just a multiple of 4 to 5 times of people's annual income, which is one of the most affordable in the world. Frankly, I think it's a question of some good news trickling in, and when people get confidence back in the economy and the macroeconomic situation, I think it's all going to look better. I do not, personally, my view is that there is no downturn. It is some suspension of purchasing decision which is now happening, not only in real estate, but I think all around the economy. Everybody is in a wait and watch mode. That is my understanding of the situation.
We have Mr. Vimal Sharma from LIC Housing Finance. Sir, would you agree that everybody is in a wait and watch mode, or is this just a consequence of the macroeconomic factors that we are witnessing in the country and globally?
अगर आप इजाज़त दें तो मैं थोड़ी हिंदी में बोलूं, फिर मैं अंग्रेजी में बोलूँगा। सबसे पहले मैं अनिल शर्मा जी को धन्यवाद देता हूं कि मैं यहां पर हूं और मेरा कोई लोकस स्टैंड ही नहीं है यहाँ बैठने का, इसलिए कि मैं अभी LIC हाउसिंग फाइनेंस का मैनेजिंग डायरेक्टर नहीं हूँ, मैं LIC इंडिया का मैनेजिंग डायरेक्टर हो गया। तो लेकिन हमारा स्लोगन ही है, ज़िंदगी के साथ भी ज़िंदगी के बाद भी, प्रोमिसेस आर टू बी केप्ट। चूँकि क्रेडाई से मेरा 3 साल पुराना बहुत प्यारा संबंध रहा है और शर्मा जी के अनुग्रह को मैंने ना नहीं कह सकता था, इसलिए मैं भाग करके आया अपनी बोर्ड मीटिंग छोड़ करके। Friends, you have come from all over the country, and certainly there are many issues coming to in the real estate sector, construction, residential, commercial. There are many issues from the customer side also, and we are particularly in the middle. So I To a great extent, I will agree with Mr. Sabharwal, Pankaj Bajaj, that there are not much issues if we are in the right place. But still, having said that, I will say that there are issues. And those issues are not because of you. Those issues are despite of you. If there is a slowdown visible in this segment, it is not because of the developers are not building or the prices have gone high. It is primarily because the economy slowdown has created a kind of recession where employment generation is low, increments have gone down. Now how you will go, and this is clearly visible. As a managing director of a premier housing finance company, having roughly about more than 85,000 crore assets and more than 1 million customer base, I can say that there is a clear signal that at the upper level and upper middle level, there is a slowdown. But the solution is as simple as that you come down. If you go to the lower middle tier, where if you are in the somewhere, I will say that maybe 40 lakhs to 1 crore bracket, people are buying just like that. There is no visibility of any slowdown in that segment. This is the aspect of market demand. So far as the supply part is concerned, the basic issue which is coming with the customer is that the timeline is not being maintained. Now the time has come. Whether you are in politics, whether you are in business, you are in real estate business, you are in services business, you are in manufacturing business. If you are not able to stick to the timeline, society will throw us away. We will be redundant. We have seen it in the politics. We are going to see it in all segments. And that is according to me, that is the critical aspect of developer segment. I have seen developers, there are certain developers whose high cost openings have been lapped up only because the trust factor is there that if he is opening a new booking, he will be delivering it on time. So I will request all of you. Now I have become outsider, and thanks to Mr. Sharma ji who has called me, I will give you an outsider's view. If a developer is in the middle segment and he is sticking to the timeline, he has no looking back. Whatever he will construct, he will sell. And he is able to sell it better. Thank you.
Mr. Sabharwal, Mr. Sharma spoke about not meeting timelines, and it's the trust factor that gets eroded when it comes to the developer side. But to tide over the slowdown, the so-called slowdown, many developers have come out with subvention schemes. The RBI has advised caution on that, but these remain popular with the home buyer. Banks also easily lend on those, but often some of these projects don't get delivered. And it's the builder who loses face, the banker retains his image. What do you have to say on that?
No, I don't know the question. Actually, I couldn't understand it.
EMI subvention schemes remain popular in the industry as a tool to tide over the slowdown. So like he spoke about meeting timelines, that's one crucial factor which will improve the health of the industry and help it emerge out of the so-called slowdown. So my question is, it's the developer's credibility which is always at stake, but bankers easily lend on such schemes.
So are you meaning because of subvention, banker could not deliver?
Delivering a project on time could be a question of various factors. But my point is, should bankers as a community also chip in and maybe come out with some guidelines that this is the project, or maybe some kind of a regulation that these are the projects which could. How do you figure that out?
See, actually, let's try to understand why it gets delayed. I'm sure if you look at all projects where there's been some subvention or there's been a bank funding, you'll invariably find that those have not got delayed. You know, the reason why, at least I have seen, and you know, all of you are more knowledgeable than me, but the reason why I have seen projects get delayed are for primarily two reasons. One, where the expected approvals, if they were anticipated to come in a particular amount of time, they did not come. Obviously, we've also had situations where regulations change in between, and consequent to the change in regulations, it's ultimately the poor customer who suffers. So one is this whole thing of, I think that the previous discussion also mentioned this, how do we bring down everything to a single window clearance? How do we ensure that what takes maybe 2 years to approve gets approved in 2 weeks? So that's one thing which happens. Second, I think so, at times why things get delayed is if the developer has really not thought of and done a financial closure of his project. So if there is no financial closure, then, and you anticipate everything to come out of customer sales, and you've not arranged for debt, then you end up with a problem. So primarily these two reasons lead to a delay. And in this whole process, trust me, it is not only the developer who suffers, the banker also suffers in this whole process. And he's also equally interested in getting the project up and they're, in running in the shortest period of time. The customer also suffers, but probably the only person who does not suffer is the person who did not give the approvals in time.
Pankaj, we are a few days away from the RBI monetary policy. Expectations we all have, but we all know that the RBI is dealing with high inflation, low growth. It's a tough call to make between the two. We may or may not have some relief on the interest rate front, but how big a factor is the RBI stance going to be as we move on to 2014?
Not really. I think it's interest rate is a factor which is always overplayed, and we all make public and press statements saying that RBI should have brought down the rates and that this is killing the industry. Frankly, within these four walls, I don't think it's that big an issue. I don't think a customer buys or does not buy a property because the home loan rate is 9.5% or 10.5%. It's a floating rate of interest. He knows what's high today can come down tomorrow. He has to basically like the project. He has to have faith in the developer. He has to like the location, and the price point has to suit him. So I don't think a difference of 50 basis points or 25 basis points or even 100 basis points makes or breaks a purchase decision. I think the point what Mr. Sharma made is more important, that does he have faith in the developer? Does he believe that the project is going to get delivered on time? Does he believe that he's going to get what he's paying for? Gitambar, you want to say something? Okay.
There was a pertinent question. See, actually, they have the mic. I'm sorry to interrupt.
Yeah, no problem.
But it's the road to progress, and I think all of us here want to ask Rajeev this question. See, Rajeev, you've been with us right from the start, ever since home loan and ICICI. I think I need a mic. Thanks. So, Rajeev, we are talking of the road to recovery, and you've been with the industry. You've seen the industry evolve, for the last decade. The subvention scheme, you mentioned it just now. In your experience, in all these years, when subvention was being done aggressively, when there was no real default, I mean, you can correct me if I'm wrong, in the subvention scheme, there was no default from the developer's side or from the customer's side, and then the RBI goes and actually shuts down this scheme and asks banks not to do this 80-20, so-called 80-20 scheme. Why did the banks not put up a case to the RBI and say, when there was no default in this scheme, why was this measure required at all? And this was a great support to industry. There was no need for actually closing the scheme, and this would have been a huge support in the road to recovery. That's all. I think we all over here agree with that.
Is the RBI being overly cautious?
It's true about RBI, it's true about bankers also. And I'm sure Mr. Sharma will agree. It's our job to be cautious. What are we doing? We are holding depositors' money. We have a fiduciary responsibility there to ensure that his money is never put at any stake. There's no risk to him not receiving his money. So I think so as bankers and as the regulator, I think so it's our responsibility and it's ingrained in our blood that we will be conservative. And I think so. I don't think so there's anything wrong with that. I'll come to your other question, Gitambar, where you asked, is recovery, the road to recovery or what needs to be done. I was just thinking that what really impacts, housing demand or what really probably can give a boost to it. I was just thinking there are 4 or 5 factors which impact this demand. One is, and then we can just talk a little bit, 1 minute on whether we are seeing a change in those factors or not. One is clearly what's happening in the economy per se. We are a part of the whole system. I don't think so we can stay away from it. So if, for example, the corporate sector is having less profits, it's not investing anymore because it's not seeing the returns on the previous monies, or no new job creation is happening, we will not see the same amount of salary increases this year. Clearly, it is a deterrent. It's a deterrent to this whole process, and we can't run away from that fact. Second thing, which is very important for good real estate or good housing business to happen, is growth of infrastructure. I think so. Whichever cities have seen good infrastructure growth, they have seen progress in real estate prices better than any other location. The third thing, which is very important in this, is are the interest rates affordable? Are the interest rates low? A low interest rate environment will definitely lead to more growth than a high interest rate environment. Fourth thing, which I believe is very important, is when a customer buys this asset called home, which is probably the most important asset which he buys in his lifetime, there is a feeling that am I buying into an asset which will appreciate or not appreciate? So if you are in an environment wherein he feels that after buying his asset price will go up, the tendency to buy will be more than when he expects prices to remain flat or the prices to go down. And I think so. Fifth factor which is important is, have you got the right mix on size and price for that location? If you've got it, then probably you will do better. Now, if I look at all these 5 factors, I think so the change, there have been some steps which this government has taken. We may not be happy with the pace of those steps, but it will not change in the short run. I don't think so we expect the economy to start growing at a much faster pace, new investments to start coming in a faster pace, and new job creation to happen in a faster pace. So this will not change clearly at this point of time. Do we expect infrastructure to suddenly become better? It will not. I think so this whole infrastructure investment takes time, and it will take time for that to become better. Will the interest rates come down in the short run? I don't think so interest rates will come down in the short run. If you look at what the inflation figures were, this week, it only is talking about maybe we may see an interest rates increase, but I don't think so the credit growth has been strong, so we may not see an interest rate increase. We may see flat interest rates, but definitely we are not going to see interest rates coming down in the short run. So what are the 2 things which are probably in our control? One is, have we got our mix right on the size and the price? I have seen developers sitting here in this room and saying that, look, we launched this project in this location, and I gave these specs and I gave this size, and it was within those 50 lakhs or it was within 80 lakhs, and it sold like hotcakes. So there are people who are selling well in today's market also, but they've got the mix right. And the second thing is, how can we give the product at a price or whatever you say, such that the customer feels that if he buys today, he will see appreciation. And that confidence has to come from you and has to be communicated well, that this is probably the best price he can get, or you are already giving a discount compared to the price you were offering below, and this is how the discount is coming in. And with this, with the economy doing better, he will see an appreciation. I think so these 2 things are within our short-term control, which we can impact, and probably we should work on, impacting this.
We also have Vishal Kumar from Xander Advisors. Vishal, can you give us an insight into what the mood is like among PE players in India? Some days we hear reports that there's an exodus of PE players. Some days we hear reports of big ticket deals. What's the mood like?
So as far as private equity is concerned, I think the mood also depends upon what the investors of the firms think about India and what do they want to do in India. And that, I think quite clearly, and whoever you speak to will tell you that the mood is very somber, because a lot of money has been invested in the sector over the last 8 years now, since 2005, and most of it is not given any return at all. Most of the funds are, or most of the deals are in red. And it may be for a number of factors, and it could be mostly the investor's mistake. But the mood is very bad. As a result, there are really very, very few traditional private equity players left in India. I think we can count them on the fingers of our hands. There was a time in 2007 then where we counted, and there were 132 private equity firms in India doing private equity deals. Today there might be 10, but there are probably only 3 doing private equity deals. The others are just doing different forms of debt. And they may not call it debt, but it is really debt. So the mood is low. A lot of firms have learned a lot of things over the last 8 years, so they know what not to do, what to avoid, how to go for good partners, how to select good partners. So I think a lot of learning has happened, as a result of which they are much more selective now. They are much more careful about what they do, and they spend a lot more time doing due diligence on a given transaction or investment or partner. But at the same time, the industry is all about making a good return on its investment. So there are deals where we believe, and I'm sure other firms believe, that a decent amount of return can be made. So if earlier, out of 100 deals you found maybe 10 where a decent return could be made, I think now you'll probably find half. But still that half is there. And so if you find that half, then you go after it and you try to close the deal. But the volume is down, according to me. Yes, deals are bigger because people realize that there's really no point doing a small deal, because just every deal takes the same amount of time, the same amount of effort to manage. So if you're going to spend that much of time, you might as well do a larger deal. So you'll find that deals will be fewer but larger. They will typically go with investors, with developers who are much more established and experienced, who have professional teams, where the location is good. Typically the approvals are there or very imminent, and the market is strong, etc., etc. You will not find equity deals happening in the outskirts of cities, or in commercial greenfield development, because nobody really wants to do that right now, or greenfield hotel development, or greenfield retail development for that matter. A lot of money is going into residential, where we believe the demand risk is low, and in operating commercial, where we believe that the rent is already there, the building is already built, so you basically count on rental growth. So that's basically what private equity firms do.
Just one thing I'd like to add in the previous thing. What I mentioned is what is required today. But we should not get bearish on this, because maybe 1.5 years down the line, we will see infrastructure improving, we will see more investments coming in, we will see salaries growing. So we have to adapt to this period, and we have to get over this period and not succumb to it, or not get too pessimistic about it, because in the long run, probably we have got far more things working for us, but in the short term, we will have to adapt ourselves to do better.
Yeah. Actually, audible? Rajeev, you just said we have to understand this scenario, current market situation. In fact, my worry is when the sentiment goes off, like, buyers also holding on, why it is so that developers also suppose start holding on his construction, just imagine. Or banker decide to hold on further investment. My point is, a typical case, a developer actually, the moment he starts booking, he takes very small amount, say 5-7 lakhs per an apartment. So he's happy that his order book is full. Let us say 300 apartment he has sold. So at a nominal booking amount, he has sold his apartment, he is happy. But the moment he enters into construction, we hardly work together, like developer, banker and customer, understanding each other's need, so that some sort of financial closure can happen. So at least that 300 apartment doesn't get hold up because of any of the sentiment. So why can't we understand this business and market, having discussed so much and seen so much of development and believing the India story or the growth story of this sector? Why can't we work together or find solution typical to the current situation?
Just
See, sorry, go ahead.
I mean, I would like to add one point. It may not be the, I mean, I will say that the government view as such, I will say. But certainly I would like to share with all of you, because Finance Minister has clearly again and again shown the concern and had the meeting with developers also as well as the bankers, wherein, I mean, incomplete or half-complete projects can be completed by financing it. Somehow we have come to a situation wherein even the developers are not ready or not able to absorb the credit and complete the job. This is one area. But still, the direction to the lenders and bankers are very clear that whenever, I mean, it is to be seen in a segments, wherever there we are finding that the last mile completion is required, it is to be funded. That is very clear.
Pankaj, do you feel that the focus now should shift to tier 2, tier 3 cities? A lot of builders only focus on the big metros, tier 1 cities. Do you think these small towns and cities will drive growth for the next phase for the years to come?
Very clearly, the replacement cost of the products that we are selling in tier 2 is much more than the prices right now. So something has got to give. या तो प्राइस बढ़ेंगे या फिर ज़मीन की कीमतें गिरेंगी. ये तो लग नहीं रहा कि ज़मीन की या कंस्ट्रक्शन की कीमत गिरने वाली है टियर 2 में, तो लग तो रहा है कि प्राइस बढ़ेंगे क्योंकि टियर 2 में प्राइसेस अभी बहुत ही कम है. आप कोई भी शहर ले लो, ज़मीन की कीमत लीजिए और उस पर कंस्ट्रक्शन कॉस्ट लगाइए और जो आज आपका सेलिंग प्राइस है वो उससे 20% कम पे है. So people are just selling their old inventories and they're liquidating their old positions. Something's got to give. It could be a great time to build up positions now, because I do feel that prices in tier 2 are going to rise. On the other hand, in the last 3 years, NCR has given great returns in the last 4 years, and I was speaking with some of my NCR colleagues outside, and we feel that there are hardly any returns at these prices in the NCR right now. And if you look at Noida, a lot of people are selling, the market prices are 4,500 to 5,000 rupees a square foot. If you add up everything, the developer are hardly making any money. Similarly for Gurgaon, you forget the inflated prices, but the real price at which deals are happening. So something is going to give in terms of either the prices of end products, either they have to rise or the input cost has to go down. I feel that the input costs cannot go down because of the construction cost definitely is not going down. And historically, land prices in India, for a number of reasons, whether it is supply related or many other reasons, they do not go down. So I do feel as soon as the sentiment improves, and that's not in our hands, that's a national and or a macroeconomic thing. As soon as the sentiment improves, it could be with the elections, or it could be a little later, or it could be after much of the supply which is in the pipeline which gets absorbed, and the visibility on deliveries, the sentiment will improve and the prices are going to rise. But I'll take this opportunity, since I have the mic in my hand, to pose a question to the capital providers, and this question is from my colleagues in the audience, that as major providers of equity and as debt, real estate development is a capital-hungry business, and we need large sums of capital to turn around projects. Many years ago, RBI frowned upon bank funding for land purchases. And then we went to private equity guys. We tied up with private equity people to fund our land purchases. Now Vishal says that there are only 3 or 4 private equity players in the country who are willing to do plain vanilla private equity deals, and the rest of them are doing structured finance, what we call structured finance, and which typically comes at the land purchase level. It typically would come at 20% plus. So what would your advice be to developers as a community in terms of acquisition of further projects at this point in time, and whether we should look at it or we should also just have a quiet holiday for the next 6 months, hold on to our inventories and then look for expansion later on? And if we do look at things, then how does it get funded? So if both of you can give a quick word each on this.
I actually personally think that this is probably the best time to buy land in India over the last 10 years maybe. I don't think land prices have gone up in almost all the major metro cities, and I'm more experienced in metro cities for the last 2 years. I mean, there might be pockets where they might have gone up, but I don't think that as a general rule or an average they've gone up. In fact, in several places, surprisingly, they've come down. So that I know of places in major metro cities where land prices are down 20 to 40% over the last 2 years. So if you have the capital or a partner who's ready to go with you for the land acquisition, I think you should try to buy a
Sorry
good
to
parcel.
interrupt, but the capital which is coming in is at a fixed return of say 22%. Would you advise developers to borrow at 22% and buy land right now?
I don't think there's a general answer. So we have, for example, I mean, I can only speak from my experience. We have found some cases where even if you no, I don't know whether you want to borrow or not, but let's say that if you were to buy the land at the current price and sell at the current price with a very modest inflation built in, you can actually make a 32% return. But at the same time, the vast majority of the deals are those where you cannot make more than a 15% return. I think the difference, and this is at least my experience, is that the amount of time that is assumed for either agglomerating the land or for getting approvals or for delivering the project is misread by a factor of between 50 to 200%. So if a deal comes and the developer thinks that he can get the land in 6 months and the approvals in 1 year, my experience it's typically 4 to 5 years. The dichotomy in the reality and the assumption in that part of the deal usually causes the most amount of heartburn both for the investor and for the developer. So if we can all be realistic in these two factors, I think you'll find that one, deals might be fewer, but they'll be better, and there'll be much less heartburn on both sides, and you'll be able to then project at least realistically whether you can take money which has an expected return of 20 to 25% or not.
All right, on that note, we'll have to wrap
Just
up
a
this.
last word from Rajeev before we can close. We've been handed a slip to close urgently. So last word to you, Rajeev, as always.
No, I was just trying to answer one or two questions, one you raised and one which was raised earlier. You know, this whole concept of flexibility. Are you flexible enough or not? You know, what I have seen and up till now, and I'd repeat that, we've not had in all the businesses which we have done up till now, I don't have a single NPA standing on our book as far as funding to developers is concerned. And the credit, the larger credit for that goes to you, for all of you for making that possible. A little bit of credit should also go to us that we have been flexible in understanding your needs and adjusting ourselves based on the situation in which you are in. We've had situations where based on the amount of flexibility which we have had to structure repayments or do something, we've done it from our side. But I think so at the end of the day, it's been teamwork which has helped us, both of us, in trying to provide finance and for you to deliver houses. As far as your other question on, we as banks can't lend for land per se. So, it's very difficult for me to answer that question. But, we as Indians have always been capable of finding solutions within the difficult situations in which we are. And we have tremendous sense of resilience. I've not seen this amount of resilience in, probably most of the countries across the globe. The fact that today, if we do not have people who can't give us direct private equity in the form of equity, we have to take structured debt. We have to take structured debt. There's no answer to that. Probably if that's the only way, we have to look at how we get around that. Because if you look at a project which probably costs, let us say 100 crores, usually the developer is chipping in at least with half the monies. And you will tend to, probably take either equity or debt, for the rest 50%. And even if the equity is coming to you at 20% and the debt is coming to us at 14%, what on the overall basis you're getting is probably on 100 rupees you're paying not more than 9-10% cost. So if your appreciation is more than that per annum, you can very well, probably afford it. Now, would the situation have been better if you had pure equity and the person was willing to take an equity risk, or you had debt coming at 10 or 12%? Yes. But, it's like saying, what's the point in dreaming something which I don't have? I have to live in the current world, and I have to live with the, current participants, and I have to do business in that scenario.
Pankaj, very quickly, your outlook for 2014, briefly.
I think that there are too many imponderables. I think they're, frankly, I hear Gitambar saying rocking, but one does not know. And there are too many variables right now. So it all depends on the elections and what the mood is. The mood itself depends on a number of things. It depends on the global factors. So I think one has to focus on your, as our company, we would be focusing on our existing projects and will be looking to executing them well. And if an opportunity comes, and I think I'm speaking for a number of people here, if an opportunity comes along, we would not be shy of taking in the plunge.
Just one thing I'd like to mention here, you know, what is essential in today's time is to think of how you can differentiate your projects. No point in launching a Me Too project everywhere. I'm not saying Me Too is bad, but everybody trying to do Me Too, you know, in a market which is difficult doesn't help. There was a situation where subvention helped at one point of time, and it worked so well. There have been situations where, you know, I know people have modified the complete product and tried to fit it into an income bracket which the market could absorb. Probably there are, you know, these are just two solutions, but there are, if one puts his mind to it, probably there are more solutions which can be found. I know of auto companies who said that for next 3 years, we will take care of all your maintenance. You know, I've not seen any developer come and say, for next 5 years, I will maintain your houses come whatever may. And so many other. I know at one point of time, some people came about with saying that I will guarantee that if the price goes below this over the next 6 months, over the next 1 year, I will protect you. So there are different things which probably the customer is looking at. How do we ensure that we try to find some innovative solutions, try to give something different which can help us perform better than anybody else in the market? And it is wrong to think that innovation will end at these 2 or 3 things. I think so, you know, fertile minds can think of far more innovations which probably the customer will like much more than what he's getting today.
All right, need for innovation. In the worst of times, people come up with the most creative ideas, and the outlook from rocking to resilient. How 2014 pans out, we'll have to see as time comes. Thank you so much for this discussion.